and insights with us. To start, I'll introduce myself and then I'll invite our panelists to do the same. My name is Jamie Anderson. I work at CGAP. We're a small team that sits inside the World Bank that focuses on financial services. We think about what makes sense for a financial service provider and what works well, what adds value for customers' lives and livelihoods. Inside of CGAP, I lead our work that's focused on rural and agricultural livelihoods. And that, at the moment, focuses in large part on how we serve rural women, because this is a market that we see that's largely underserved, and to us that means a business opportunity. So we're thinking about how can rural women be better served, and how can their needs for different products, services that increase their climate resilience be met. And of course, partnerships are at the center for us. Like Sieko was saying in the morning, we have a great team, but we're only one team, and we're a small team at that, and working at these very intersectional topics on financial services, agriculture, gender, climate. We can't do everything, and partners are critical to us when we're thinking about working at the systems level. Just one quick example, and then we'll go to our panel. Right now, one of our key partnerships is with IDH. We're working on a coalition called ABERA, and you can check us out at the marketplace. But very briefly, ABERA stands for Accelerating Business to Empower Rural Women in Agriculture. And we're pulling together partnerships with a select group of financial and agricultural service providers, all very much with a business focus. Our work is to boost their business performance and also help them achieve some very specific goals on climate and gender. So again, that's the very definition of working in partnerships, and it's not easy, as we all know. That's why we're all talking about it. There's no one recipe for what makes a good partnership. It's not always clear, like I think you were saying in the video, Jared, what looks great on paper doesn't always translate in the field. So this is what we're here to talk about with our esteemed group of panelists. We'll start the conversation with asking you just for a quick introduction. Paul, let's start with you. Tell us your name, your institution, what you focus on.
Thank you. Thank you very much. My name is Paul Odong, Head of Projects at Equity Bank, specifically from Uganda. And I work in the Social Investments Unit, which is from the subsidiary perspective. This is the Equity Group Foundation department. So specifically oversee the areas around the pillars of agriculture, programs in social protection, programs with financial inclusion in terms of financial literacy, and also in the areas of health and other significant sectors that we focus on from a social investments perspective. Thank you.
Thanks, Paul. Houston?
My name is Yusta. My name is Yusta Segete from NCBA Bank within the FinTech arm of the bank called Loop DFS, Loop Digital Financial Services. I head ecosystem business. We look at a number of ecosystems, digitizing them, and providing financial services within those ecosystems. Our key ecosystem that we focus on is agriculture, where we are working with smallholder farmers in Kenya and Tanzania for now.
Great. Thanks, Houston. Anthony?
Thank you. My name is Anthony Mbidi. I head the agribusiness unit at Family Bank, overseeing ag finance across all our 94 branches and cutting across all the segments from the smallholder farmer to the corporate agribusinesses. Thank you.
Wonderful. Thanks, Anthony. So we have quite a bit of expertise in the conversation. And what we'll do is I'll ask a few questions, and then we'll invite you to ask a couple of questions as well. So be thinking about what questions you want to put to this group of bankers. Think about your own initiatives, your own partnerships, and the questions that you want to ask. So what we're going to do is we're going to start with struggle, and we're going to move to success. But first, let's talk about what you've learned, because there's a lot to be learned from partnerships that don't work, that don't turn out the way that we expect. So I was wondering if you can start with a story of a partnership that struggled, that didn't work out the way that you expected. Was there a moment, whether it was in a meeting, in a field, somewhere, was there a moment when you knew that things were off track? And then what happened? Were you able to, was there something you did to break through? Did it recover? How did it unfold? Eusta, let's start with you.
Partnerships that failed, I think we have more that fail than the ones that succeed. So I think I recall one partnership in Tanzania where we were planning to fund sunflower farmers in the area of, like we said, no naming names. So we engaged with a partner who happened to be an agri-tech. They provided data for the farmers that were to be involved in the pilot before we could roll out the program. So we sent our teams both in Tanzania and Nairobi to Tanzania to engage the farmers, collect farm level data. So the kind of financing we do at Loop DFS in agriculture, we really don't focus on the traditional financial data like bank statements and collateral. So we focus on mainly contract financing where the contract issued by the off-taker is sort of our soft collateral. And then we organize farmers into groups, bring together input providers. We have agri-tech sometimes who aggregate the inventory, the various inputs required by the farmers. So we brought all the parties together, including crop insurance, everybody who needed to participate in that value chain financing. So went to the ground, collected data, engaged government, and I've seen our brothers from Tanzania, a few of them. The government is very involved in agriculture, very supportive. So when our team arrived there, I think some of the local authority, sijui mnawaita ni dio ama dedi, they arrived there and like, so where are you from? What are you coming to do here? Of course, we introduced ourselves, engaged the government officers, and we told them what we were about to do. We had recruited local agents there to work with the farmers, to recruit the farmers. So everybody was there. We had a demo farm. Sunflower farmers had already seen when, say, the right inputs are utilized, the right gaps, the quality of product that the farmers were gonna harvest. So all that was done. So we did our work, engaged stakeholders, collected data, came back, provided the data to our data scientist team who did the algorithm. We were very new in the space in agriculture. I mean, our core business has been B2B partnerships in the telco within the fintech side. So we understand that area. There's lots of data. We've been doing the business for 10 years. So this was agriculture, first time engaging in agriculture and trying to fund maybe for those visiting, our legacy or anchor product is M-Shwari, where we provide digital credit across, the telco players, mainly Safaricom, and in other markets we have all these other players. So our data scientists have been working with data, but this is really telco data. We have lots of payment data. So with the farmers, there was a lot more to work with. So there's farm level data. These farmers, some of them didn't have much, except this is where I belong. So we did our data. We scored. We were to do a pilot of about 2,000 farmers. They gave us data of about 5,000 farmers. So we managed to score, and of course, not much data compared to the partners that we've been working with in the telco. We were only able to score about 500 farmers that could actually qualify for the credit, and we were looking at credit between $200, $300 per farmer, per acre. So we had already scored, gotten capital from our finance team to be able to finance the pilot, opened all accounts required, and now started onboarding farmers. Then midway, the government of Tanzania, like I mentioned, very supportive to the farmers, introduced a new regulation that all fertilizer has to be procured directly from the government. Our agri-tech that we are partnering with had already procured fertilizer. And the government is here, DO, and Asema, you know, Daddy, we cannot, you cannot provide farmers with this fertilizer because government has provided subsidized fertilizer. So that really changed the business model. The agri-tech that had already procured and were in the process of procuring more inputs from the other input providers, I mean, the partnership really collapsed because the agri-tech actually, one of their business model is to make, how they commercialize the model is to make, they sell the fertilizer to the farmer at a small margin as much as they procure it in bulk. So the government legislation really collapsed the whole partnership. We had not seen it coming, and we thought we'd probably have some heads up that this is coming. So maybe you have already procured, you've scored the farmers, maybe you know, provide credit to this group of farmers with the inputs that you have financed, then maybe second round work with the government subsidized fertilizer. So the whole model collapsed on that because then the biggest input that we were going to finance was fertilizer. So that is, I can say, is one partnership that failed. To date, we are still looking at what else can we do in that space. Having recruited farmers, we have all this data, and we have all this regulation that has collapsed the whole model. So I would say that's one that I can remember very recent. And we are still looking at this partner, how else can we work together?
Thanks, Yusta. And thanks also for your honesty about the fact that, you know, in some ways there's so many things that need to line up for a partnership. It's exceptional when it succeeds. So, you know, sometimes when it doesn't work out, we're a little bit reticent to talk about it because it's maybe we don't want to put any shade on the partner. We don't want anything to. We don't want to speak ill of anyone we're working with, but it also, we lose an opportunity to learn what happened as well. So thanks for sharing that with us. Paul, what about from your side, one of the partnership that was a struggle?
Thank you. There are quite a lot of them. But I'll just speak, I'll pick like more of a case study because they have all one common aspect. So from a partnership perspective, I think the key question that both parties are always looking at is what is in it for me. Now, one of the key challenges that we have had is that being perceived as a financial institution and not from the social investment perspective. So most of the time, one of the things that come in between this is from the social investment perspective, we get into this partnership for social transformation. But of course, we also look at it must be sustainable for either party. So there are always those aspects. Very recently, we have been we struggled with one particular partnership because of these aspects. So we launched, or rather, we set out to be deliberate from a financial institution perspective to partner with fintechs, because from a strategic perspective, we are looking at this as the which will help us to drive the strategy, what we are trying to do, especially in terms of financial inclusion. Because we realize that as a bank, from a conventional perspective, on the economic side or the banking side, we need to, we have the strategic goal to reach more and more customers and bring this financial inclusion. But we cannot do it alone as a bank. We need to partner. We need to work already with established agri-techs, institutions, development organizations who have done a lot of work in already mobilizing and bringing the smallholder farmers together. So there's always the missing link is the access to finance because of the financial institutions, the restrictions that are in. And also on the other side, the agri-tech or the fintech may have, or these particular organizations may also have their limitations, may probably from a point of view of the license perspective. So we come in to bridge that gap. So for this particular partnership, it took us quite a long time to first of all do the convincing of this partner to come on board to work with us. And yes,
you had to convince the partner, or you had to convince your internal stakeholders?
It was more convincing the partner because there was a belief that we have tried this before with financial institutions, doesn't work. Yeah. So and what different aspect or perspective is Equity Bank offering? That it was more from that perspective that banks are not really very serious actually about working and extending credit to these smallholder farmers. They maybe want to deal with the other segments where there is probably a guarantee of repayment and that kind of thing. So we finally started working together on this particular partnership. But it was problem after problem after problem in the field in terms of lessons learned, in terms of tools, equipment, but most of all also looking at the limitations around the financials, the commercials. Like I said, what is the need for us and what's the need for them? For us, we are very keen after the numbers, after reaching more and more people and extending this opportunity. Okay, but of course, it also has to be profitable for this fintech. So I think for me, one of the key things that we realize that it's from the output. Okay, so when we realize that we have this large number that we are targeting and hopeful that actually we are going to get it, but when finally went to the field after a lot of negotiations, alignment, and talking about convincing about the trust issues, data sharing, eventually now the numbers started trickling in, but they're really very, very minimal. So when we realize that now I think we need to look for other alternative ways to actually work together with this partner to ensure that we achieve what we wanted to do. By the bank going out of the way to actually support on certain areas where they were struggling, especially in terms of onboarding the customers. A lot of things to do with, of course, even the capacity building, the training, and engagement on the models, the model that we can use to actually make sure that this particular project succeeded. Yeah, thank you.
Thanks, Paul. Anthony, there's some themes coming through in what you, sir, and Paul are saying about trust, about profit sharing, data, organizational culture. Does this resonate with your experience of partnerships that have struggled?
Well, very much, although I have a different, slightly different story from where I sit. I think 90% of my work revolves around partnership. I deliver through partnerships, and so I've seen the good and the ugly side of partnerships. But one of the most memorable ones, and which is actually very recent, is where a partner comes to pitch, seeking for partnership. We buy their idea. They promise so much. You go through all the rigors of bringing on board a partner, which is not easy in the financial industries. We go through all that process. You get the chance to be approved, and then we hit the ground running. Then this specific one failed on the data side, whereby this partner had promised us huge data of the target of the segment, But then when we had already signed the agreement and we roll out the program, it turns out that all this was just for them to get business. And then it turns out that now it is not them to provide data, it is us now to provide us with the customers who are in our database so that they can start talking to them. Well, of course, I don't need to say more, it died. Of course, it's very frustrating when you try to figure out all the pitching that sometimes partners do to us. The processes that we go through to bring that partnership to life. And then when we expect as a financial institutions to start reaping from this partnership. And of course, our role is to provide finances. We are experts in that. We may not be experts in the other side of things. So we are counting on this partner. But then again, it turns out that this partner was just lying. And so the issue of reputation now comes in. And so if there are potential partners sitting in this room and you happen to approach us and you find it difficult, you find us difficult as we are often referred, just know that we have learned. We've been through hell sometimes with partners, and that's why we really don't just take in partnerships casually. You'll be subjected to a lot of due diligence, and by the time you get on board, then we want to be sure that you can be able to deliver what you are promising in those pitch decks. Thank you.
Thanks, Anthony. Yes, sometimes there's quite a difference between a beautiful pitch deck and what's actually happening in the field. Thanks for that candid reflection. Anthony, let's stay with you and let's move more toward the positive, where you see there's success. Think about, to your point, think about your ideal partner. How would you describe them in 3 words? Tell us 3 words and why.
Thank you. I think financial institutions, we are very sensitive institutions. We are custodians of customers' data, confidential information and all that. And so anybody coming to us as a partner, you must be very reputable. Due diligence precedes everything. The moment you start talking to us, we subject you to due diligence. And sometimes we may even ask you for documentations that most of you may not be comfortable with, but they are very necessary for us to make a decision on whether to continue to the next steps with you or not. Secondly, I think innovative. We want somebody who can fill the gaps. We are not experts in everything. For example, if I'm serving smallholder farmer segment, and this is an input financing kind of arrangement, I may not be an expert in distribution of inputs and all that. Do you have a solution towards that? So you should be able to fill the gaps that I, as a representative of my financial institution, I am not able to do that. Then impact also now, especially when we're talking about, I know there will come, the revenue discussion is always there. The bank wants its cut, the partner wants its cut, but how do we balance so that our interests also don't really overcrowd the interest of the target customer? So that means that we have to exercise some level of flexibility and give and take kind of attitude in that, yeah.
Thanks, Anthony. So I'm hearing reputable, innovative, complementary, and having impact. Euster, how does that sound to you? What would you say are your 3 things you're looking for in a partner?
So at Loop DFS, we look at a partner who can scalable. They have a customer base that even if at the time of contracting or partnership, they don't have as many customers over time, we can be able to scale, noting the ticket sizes that we lend are really 5 acre and below. So we'd like a partner who can scale. Number 2, we prefer to work with farmers who are digitized, in this case agritechs, who have some level of digitization, can connect to us through APIs. We are able to do digital onboarding and KYC, so that would be an ideal partner. Number 3, we are also looking at partners working in structured value chain or crops. such that we're able to follow the money trail from when we provide inputs to the farmers to when we get paid by the off-taker. So those will be the three key partnership that we look at in terms of onboarding a partner.
Okay, that's really helpful. I hope you all are thinking about your questions and doing a little self-reflection about scale. What else did you say, Stuart? Digital value chain. And this gives you a good window into what these banks are looking for. Paul, from your side, how would you describe your ideal partner?
So more or less the same. Maybe I'll just concur, especially on innovativeness and an innovative partner. Many of these partnerships that we have gotten into, because for us to drive that for that innovation agenda, because we are dealing with the people, we want us a solution may work because across the group, it may work in Kenya, it may work in Tanzania, but it may not work in Uganda, but it's the same solution. So sometimes, actually one partner asked me, why has this worked we have worked very well with you in DRC, but it's not working here. Where is the issue? So I think now that means that the partner was coming with the mindset of the other market, not looking at specifically the market here in Uganda, but they offer the same innovative solution, which is going to affect the smallholder farmers. So I think innovativeness and adapting to the local situation and the needs of the local communities and the smallholder farmers that we deal with is key. Number two, I think it's more sustainability. I want a partner who thinks about sustainability. We don't actually get into partnerships which are not sustainable. Sustainable in terms of, actually that's one of the key things that we ask for and look for. If we complete this partnership, what happens? Does it end? If you are doing it as a project, does it end in project? If the answer is yes, then we don't take it on. Because we should be able to carry on with that, and with that is social intervention that we are doing as business as usual, rather than as a project. Because that's what we want to see, and that's what we look at, socio-economic transformation of the people and the livelihoods of the people that we are working with, because it's in our vision. So without that, then we are not aligned strategically. Then maybe the last part, of course, speaking to that, there's an element, I think he spoke to it, about the trust. Yeah, that is actually very key, because what you bring on the table, I've had one partnership which was big with a big reputable organization, but I think from this even happened before I joined, but at the time when I came in to implement and was also dealing with smallholder farmers, it didn't work out because the management felt cheated, like you mentioned, that we were promised this 60,000 or 100,000 farmers in this period of time. 6 months down the road, it's not there. So I was just told, kill the project, because, yes, because from the onset, there's no trust. You promised to give me this, it's not there. So those are key elements that we look at. And at some point, we have to take a deep dive and look at post-onboarding partners, but look at what value are we getting out of these partnerships, and in terms of our strategic vision, are we actually delivering in the socio-economic transformation of the people we set out to do? So that check is there to ensure that everything is sustainable. Thank you.
Thanks. That's really helpful, Paul. You know what's fascinating about this list that's coming together? There's innovation, context-specific, sustainability, trust, scalability, digital complementarity, and so forth, reputation, impact. There's no mention of revenue. And maybe you're all being very polite. And you're not bringing up something that's obvious. Of course, it needs to make sense for you. It needs to make sense for the partner. But it sort of goes to the conversation that we were having with Gerald and colleagues, that someone said, oh, for the commercial banks, you just show them the money and they show up. That's all they're interested in. Is that the case? Is that maybe, Paul, when you're talking about sustainability, there's that revenue wrapped up in the sustainability, and fair enough. But I'm just wondering if you could respond to that. In other words, there's an impression of commercial banks that you're risk averse and you're just in it to make money, just in it for the business. But that's not coming through in what you're saying here. So how do you respond to that?
Yes, actually, that is a very, if you remember, one of the things I mentioned in the beginning was the commercials, is why we struggle. But I think once we define this from the onset, truth be told, no business or if you look at it from a banking perspective, you don't want to create another bank within a bank. So the approach in terms of the revenue sharing and how it is structured in the beginning is actually defines how the success of that particular program. So most of the time we are flexible. We can say revenue share, though the bank may shy away from that for obvious reasons, because depends on, like I mentioned, from the onset, what have you defined and what's the value proposition from each, from the bank side and also from the partner. But if a solution really works, we look at more on the transaction share and making sure that, yes, let's do this solution together. You have innovated this solution, we have worked on it together, and then we see how we, and then we agree on how we are going to actually show that. But when it goes into the idea of creating a bank within a bank, that becomes a very difficult conversation. And we actually had that discussion. We engaged a lot of fintechs. We actually had them with another development partner who moderated at the time. What's the real issue? Why can't you sign up with the banks? And the issue of the revenue share came up, and they say the bank doesn't want to share the revenues. Maybe we do all the heavy lifting, but when it comes to the transaction cost and whatever, but this is something that we can build within the model that on a case-by-case basis, so that ideally it ensures that the whole conversation, the whole partnership is sustainable, but also it is something that the bank can support in the long run. Because at the onset, it may look okay, you say 50, 60%, but now as say you look at maybe probably how the transactions growing, then becomes very, very costly even to the bank to run such a model. So that has to be looked at in detail and addressed structured in the model that you agreed from the beginning. Thank you.
Well, we're going to come to our last question for the three of you. We'll have time for a couple of quick questions from the audience. Just a very quick response from the three of you. Again, thinking about success, looking ahead at the horizon, what opportunities do you see in front of you where you know you need partners? There's something exciting afoot, but you need partners, collaborators to work with. Can you give us a line on what it is and the specific kinds of partners you're talking about? We talked about the general qualities in the last question, but more specifically, what kind of partner are you looking for? So Anthony, set up the opportunity and tell us who you're looking for.
Thank you. For us, we are now getting into inclusive finance programs as Family Bank, targeting smallholder farmers in different value chains. We don't want to do this in the conventional manner that banks do that. So we are having a digital approach towards this. And so any fintech that is playing in that space and that can fill the gaps that we want is most welcome to work with us. We know it's a risky segment. That's why financial institutions keep off it. And so any de-risking kind of support from the partners is also most welcome. We are ready to work with any partner. The revenue sharing notwithstanding, I think what we lose through revenue sharing can easily be recovered from the reduced cost of doing business, especially when we go digital. So that is our strategy. I've given you a leakage. I think if you're in the room and you're interested to work with the journey with us, you're most welcome. We can have a conversation. Thank you.
Thanks, Anthony. Yusta?
So for us, an exciting space that we started and still looking to scale is working with other fintechs, really across the various ecosystems we are working at, but more specifically in agriculture. We are looking at agritechs to partner with. Like I mentioned earlier, we are looking at agri-techs that can scale. You may not have the numbers now, but you have possibilities for scale. Again, we are also looking at sustainability as well. As NCBA Bank, we launched our sustainability agenda early this year. So we are also looking at partners in that space. Again, there is one of the value chains that we launched in Kisumu in rice farming schemes. So we have a lot of lessons so far learned, as much as it's still ongoing. So one of the areas that we really want to focus on is group lending, where farmers come together in groups organized in CBOs. And then we are able to lend to the individual farmers and our group. We are finding those models very effective in terms of accountability and ensuring that the farmers are really rallying each other. If we are collecting seed and we need to plant seed, they are all planting as a group. When it comes to, say, applying fertilizer, they are also doing it as a group, ensuring that they are following proper agricultural practices. So that's a model that we are currently more biased on and still learning quite a bit of lessons. The individual ones, we've had a few failures here and there, but the group model is looking like something sustainable in the long term. We started a pilot with about 1,500 acres, all in smallholder farmer. We are looking to scale it to about 15,000 farmers in year one alone. And the group model is looking like a model that is more sustainable. Like my colleagues mentioned, we as banks are looking to be in this space 5-7 years, not projects that we are going in 1 year, we burn our fingers and we are out. So we are also looking out for development partners in this space, especially within the credit guarantee space to help us de-risk. Noting that we are not doing traditional banking, we are working with alternative data, which a lot of times is not available. So we have to throw money at, so that we can just collect data, and over time we are able to refine our scorecard. So we are really looking into working with development partners to be able to build better scorecards, collect more data, which is a process that may take a year or two before we can get refined data. If, say, I look at our M-Shwari business that we've had it for the last 11 years, we started with really very minimal data, and our NPLs were running upwards of 20 when we started. We are now doing about 4% NPL because we've been able to collect a lot of data. We've become better at credit scoring. So we'd want to do the same for agriculture. However, the risk is quite high, and like we mentioned, the revenue is really key. We are working with shareholders who are very keen on return, and they are getting return in all other sectors, and agri is a space we're really convincing them to play. So a lot of partnership, DFI support will go a long way in terms of building that sector and being able to scale it and being there longer.
Great, thanks, Yusta. Paul, opportunity for you on the horizon and the partner you're looking for, then we'll have 2 quick questions.
Yes, currently we are working actually from a strategic perspective. If you've heard of our Africa Recovery Resilience Plan, we target to reach about 100 million customers, okay? It is an uphill task, but we have, and the only way we can reach that is working with the partners. And the exciting opportunity where we're working on right now is with AgriFin, in terms of especially doing something innovative in terms of using alternative data. We, rather than using the conventional data, banking data, how do we extend financial access to the smallholder farmers digitally? So we're working very closely with AgriFin on that, and we do believe that this is something that will be very revolutionary in terms of, it's not something that we have done conventionally. but it's something that we are trying, we see that will help us reach these smallholder farmers and these or traders even, for that matter. But to be able to achieve that, again, as my colleagues have mentioned, I think we have already these the farmers or smallholders, traders, coming together in their respective cooperatives, circles, or even out there in even difficult reach areas. And then the only thing that they have is access to maybe a mobile phone. The nearest bank or branch is hundreds of kilometers away. We're doing a lot of work with the refugee communities and the host communities. These are the kind of people that they need these financial services. But what does it take for you to get a loan in the bank? The bank must know you for some time, or have some information about you, about your farm, about something about you that can help them make a decision. So what we're working on in this project is actually develop those alternative credit scoring models that we can use the data that is already available out there and rely on it to actually make a decision to provide this financial service. So it is something that we have started. I can say it's we're still in the learning how is it going to work with the help of Agrifin. So that is the opportunity that is available to partner with the fintechs, the agritechs, to bridge this gap, because they have already this data and this information. And another opportunity, of course, as a bank, of course, we need this data, but probably it may not be a good idea to partner with every fintech. But if they also there is opportunity of aggregating this data, not for the banks to consume, probably as you mentioned about revenue share or something, that is somebody out there aggregating data from all the fintechs, so the banks just come and pick the data they need, a credit score, and they utilize it. So that would also be good, something that would work in a sustainable manner. Thank you.
Great, thanks, Paul. So rich partnership opportunities on data. We're out of time nearly, but we have time for 2 quick questions. Yes.
Okay, so I'm going to be selfish briefly. We have brought 120 farmers from 40 farming communities in Kenya. They're going to be here on Thursday. Please come and spend time with them, ask them questions and have conversations with them. They're here between 10 and 4 p.m. So my question to you is, we're an ag tech, right? I run a company called Koamana. And we've managed to figure out trade financing beautifully. But there are a couple of things that have been a challenge, like input financing, for instance, and now equipment financing. And for 2 reasons, I think, that you already mentioned. The first is on input financing. We procure input with agri-dealers, but what happens is, a month later, the government floods the market with subsidized input. And then we've introduced lease-to-buy models, for instance, in Nigeria for solar irrigation pumps. But now, all of a sudden, there's an NGO giving out subsidized solar irrigation pumps. So, of course, for us, it's not business viable. And it means we can never work with a lender to support farmers in doing that. There's a risk to the sustainability of it. My question to you is there any conversation happening with government, banks, and NGOs to kind of, I'm not saying don't give subsidized things to farmers, because some of them need it, but to kind of align on these things that are happening to prevent businesses from falling apart because of these interventions. Yeah.
Thanks. We had one more question on the front table.
Thank you. My name is John Mungai from Agricultural Finance Corporation, DFI. In all your discussion, I have missed to hear an opportunity on partnerships with public entities, DFIs, especially how we can, as having been backed by the government, how we can work together. We provide the de-risking aspect, and you provide a more quote-unquote safer investment or lending. So my question is, do you see an opportunity in partnership between you and DFIs in your countries? And what kind of partnership do you see, if there is any?
Thanks, and let's combine those a bit. We can talk about dialogue with policymakers, public sector, regulators, and then possibility for partnerships. Yusra, do you want to start?
Yeah, I could take that. So when it comes to government partnership, we actually reach out to government for partnership. We've been trying to work with and AFC, I mean, you're one of our partners, to try curate a guarantee very specific to agriculture. However, the private sector moves much faster than government. So over time, we believe that, and I know there are a number of initiatives that are being done by government to have, say, private entities like AGF or other development partners run the government guarantees. Those would be very good initiatives to be able to fast track the process, since the commercial banks are revenue generating with targets, and waiting for government to implement takes time. So it is our wish that would want to work with government. I mean, I look at a project, like I mentioned, we're running in Kisumu. Government is really helping through National Irrigation Authority, making sure that the land where the farmers are farming has enough trenches, water in terms of flooding. They'll be able to put in all that drainage and really support it. And we are succeeding because of NIA has done good work in terms of rehabilitating the land. However, it takes time. So for me, I would suggest that more talks. I know we are talking more. We are trying to see how can we help government fast track some of these initiatives, maybe by partnering with private entities to support government in terms of fast tracking, if it's credit guarantee, if it's the subsidy process. We've had instances where farmers wait for the subsidized fertilizer, and we are ready to work with the government through NCPB to purchase the fertilizer. However, sometimes may not come in good time, noting that farming is very seasonal. You delay by a month, you're already out, you've burnt your money. So I think more partnership with the DFIs to support government initiatives is a move we are working towards, and really looking to grow in that aspect, where you can be supported to fast track.
Thanks, Yusra. Anthony, do you want to build on that?
Yes, I wanted to take the question around government subsidies, especially around the area of input. And this is a live example. I'm currently implementing a program supporting input financing for smallholder farmers. When it comes to government subsidies and our role as financial institutions or private sector, you'll find that there is always that gap that you may need to fill. For example, the government of Kenya is running a fertilizer subsidy program. In my program, part of the package for the inputs is actually fertilizer, which is commercial, so it means that it's more expensive than what the government is offering. But when we went to the ground, we found that, one, the government depots are very far away from the farmers. So much as there is that subsidy, the cost of getting that fertilizer from the central depots is high, and so the farmer ends up spending a lot more. Secondly, there are areas that the agronomists have advised that this planting fertilizer or this top dressing fertilizer doesn't work, yet the government is providing generic solutions to all areas across the country. So you intervene and give them what is recommended for their region. And because we work with soil testing agencies, they know the best kind of fertilizer to be used in such regions. So the farmer will not go for the subsidized fertilizer because it won't work in their situation. They will want the other fertilizer. Now, we also now make sure that our solution involves last mile delivery, such that the farmer will get that fertilizer at the nearest point. And so we spare them the transport cost. At the end of the day, they find this one a bit more attractive than even the subsidized fertilizer from the government. Yeah.
Ajay. Paul, a quick last word building on that.
I think I would speak more of, on the partnerships with the DFIs. And I think for us, that is what has really worked for in terms of growing our social investment. Basically, in terms of coming, in terms of de-risking, and also looking at from the market perspective, some of the things, things to do with the credit guarantees, risk-sharing partnerships. In some instances, of course, there are those grants, but I think it has been a mix of both, but largely it is what has helped us to move and scale most of the products that we are having, especially in our target customers in the micro sector and all those hard-to-reach areas, and also those especially supporting our programs in social protection and these communities, vulnerable communities. So working with the development, financial institutions, and also with government in these areas has really helped to bridge the gap in terms of financial access. And it's one of the, those are some of the partnerships that most of the partnerships that we hold very dear, and we try always to ensure that they work and we all derive the social benefit to the communities that we are serving. And we commend the partners that we are working with in those respective areas. So it works, and it has helped a lot to bridge that commercial bank thinking more to the social investment, and also helping the communities access these financial services. Yeah, thank you.
Wonderful. Thank you so much. Please join me in thanking our panelists, Paul from Equity, Yusto from NCBA, and Anthony from Family Bank. Thanks a lot for your candid comments and